Realtor Guy from Portland, Oregon. I decided to do a quick live to kind of go over some of my thoughts, some of the key points about paying off your mortgage. Paying off mortgage early, is that a good idea or a bad idea? While I am going through this, if you have any thoughts or questions, please leave a comment. First, I want to make sure to tell you that I'm not a financial advisor. I'm just a realtor. This is not really real estate advice either, because I'm just doing sort of like a thinking exercise, kind of going through things that I ask myself. So if you have any specific questions, make sure to ask financial advisors. However, a lot of financial advisors that I talk to, I didn't talk to that many, but most of them that I set up an appointment, I met with them at their office and things like that, they have other products to sell. And those financial advisors, I don't find a good value in them because the products that they sell are what I believe to be not so good products, such as mutual funds. Anyways, that's a whole other topic. Let's go into first some of the things that I think about when I'm comparing paying off your mortgage or where to pay off first and whether that's a good idea or not. My overall thinking, based on what I know, is that it's very dependent on individual situation, age, what kind of debt you have, what kind of risk tolerance you have, what kind of financial wealth building or preservation systems that you follow, and then the other thing is like what kind of job security you have. Of course, your health. Are you a healthy person? Even if you're a healthy person, nobody knows how long we're going to live. So it's one of those bunch of questions. And when your mortgage is paid off, does that really mean it's financial freedom or not? And I added up in Washington County in like single family home, you still have to pay $600 in property taxes, about $200 to $300 utility costs every month. And then I would set aside about $200 a month for maintenance. When you need to put the new roof, it's not cheap. It's anywhere between $15,000 to about $25,000, depending on the size of the home. They're going to be about $200 homeowners insurance, and combined, sort of like a very modest number after you pay off your mortgage, it's about $1,300 a month. So when people talk about financial freedom after mortgage is paid off, but you're still hooked like $1,300 a month, so is that really a financial freedom? My answer is no. So the way to really combat that would be like you have enough assets or enough investment that gives you residual income so that you can pay off at least that, and then you have to buy food. And so to me, when there's a really high price tags on the properties, on property taxes, utility costs, and maintenance, and whatever, it's not really a financial freedom. And as we've seen this before, people who bought like, San Francisco homes, like, coastal cities, they bought really cheap home 35 years ago, but they can't afford to live there because of this recurring costs. So hello. Thanks for saying hello. I appreciate that. And so I'm gonna just kind of go over some of the things that I've been thinking about. I did some research too, and something that I want you to think about too, if you're thinking about paying off that mortgage. The first one is, have you saved up your emergency fund? when you talk to like, or when you Google how many months of emergency fund that you have to save, there's many different range, like 3 to 6 months is what you see the most. But depending on your industry, me as a realtor, when we had the dip in sales in 2022 and 23 and 24 and 25, it can be like very scary. There are months that we're not getting any. This is message is helpful reviews. Oh, somebody must have said something bad. Don't say something bad, guys. Um, so, well, so yeah, I had like sales dip, and in my opinion, for realtors like myself, we have to have 12 months of emergency fund. That's what I've learned in the last 12 months or last 24 months, that I need to have 12 months of emergency fund. That's what I realized. If you're in like, salary based work and your job security is so good, maybe you can get by with maybe like 3 months, but finding a job can take 3 months or more, right? So in any cases, I think 6 months is like minimum for the emergency fund. In my opinion, if you're in the sales job like myself, minimum 12 months. That's what I think. Aren't you the music guy? I cannot answer that link 711. I might be, yes. Do you see that guitar? That's the guitar. Gosh, I bought that one in 1998 or 99. Wow. Anyways, thank you. So, emergency fund. Have you saved up the emergency fund before you paying off that mortgage? Now, there are many other areas where you need to know your mortgage rate. If you have less than 3%, does it make sense to pay off instead of paying off your credit card at 25%, right? So you have to compare that. Do you want to pay off that 3% mortgage while it's, relatively cheap money instead of saving that emergency fund? And so you have to weigh, whenever you want to pay something off. Now, the financial strategy, there's something called a FIRE. I forget what it stands for. FIRE. I think it's a financial independence, retire early. I actually know a friend of mine who are actually doing this. I told them, hey, maybe you might want to, keep your first home into a, investment property and move into a better neighborhood for your kids. And they said, well, we like our house. We're going to just pay off as aggressive as we can and then do this FIRE thing. And my understanding of the FIRE, the strategy is you save up enough. I think it's something like 25 times of annual spending expenses. And once you save that up, you get like 4%, 5% from the investment or withdraw from your savings for the rest of the. So the idea is, why work until 65 years old and save up and pay off, and so that they can retire at 43. So if you're doing that, it makes sense to pay that off, I suppose. But then a lot of people talk about the opportunity cost, that if you use that money to pay that off, how about the money that you can earn from investing in the stock market at 7 to 10%, like S&P 500 or something like that. Again, that kind of goes into personal tolerance, the risk tolerance too. Some people will go to sleep great with some debt. Some people may not sleep well. If you don't sleep well because of the debt, then you might be falling into that. Pay off the debt, pay off the mortgage, free and clear, that's you. If you sleep great with debt, then you can be more of a risk tolerance is higher than most people, so you can maybe do that. What I mean by it is not pay off the mortgage and use the opportunity cost to invest in somewhere else to get better returns. But the stock market or investment market, there's no guarantee. When it comes to real estate, there are certain things that are guaranteed, such as the fixed mortgage payment. I ran a quick calculation here. If you're paying $2,000 mortgage in 2025, in 15 years, in 2040, that would have the value of $1,100 at that time. The rent of $2,000 in today's market will become $3,600 in 2040. So the rent has almost, close to doubling, while the mortgage payment reduced almost to half. I think that's really important portion. So if you pay it off early on, you pay less in interest, but you don't get the opportunity to have that fixed monthly payment, that $2,000 feel like $1,100 in 15 years. So the money value goes down so much that $2,000 in today's is going to be much less feeling, much less buying power. So something to think about. And then I talked about the other debt, if you have student loan at 7%, you have credit card at 22%, car loan at 7%, you kind of have to make sense, right? The other thing that people don't think about or talk about is how soon you're going to sell your house. If you're going to sell your house in the next 3 to 5 years because you don't like your house, or you have to move out of state, you're not going to keep the house, paying that aggressively may not make a lot of sense. So I'd like you to think about that too. I'll be thinking about that too. Again, this is not financial advice, guys. And generally speaking, if you have low interest rate like 3 to 4%, most people say that it's better to not pay off. Invest extra funds elsewhere, stock, bonds, retirement account, all that stuff. If you have more than 6%, paying off early savings, significant interest and making more attractive. If you have adjustable rate, oh yeah, that's a tricky one. I never like adjustable rates because you can't predict the future. 2008 market crash was partially because of the adjustable rate. Now that one, yeah, I don't recommend adjustable rate ever. So if you have adjustable rate, you have to really take the risk. What if the rate goes up, maybe, and what if you can refinance it at that time? Opportunity cost of money. So I talked about that historically stock market averaged between 7 to 10% annual returns before inflation. If the inflation is 4%, investing in diversified portfolio may outpace the interest savings from early payoff. That's what he's saying. So yeah, it makes sense. Consider liquidity. Now, liquidity is where how fast can you turn your investment into cash. That's where if you have a house that will sell within a month, that's how long it's going to take. 30 days is your liquidity period. Stock market may take 2 to 3 days to get the cash out. Cash bank, you can take it out right away. Gold, I don't know. I don't own gold, so I don't know what that means. But paying off a mortgage reduces available cash for emergency. It depends. If you do a cash out refi, that can be done in 2 to 3 weeks. So there is certain liquidity in real estate too. Let's see, other debts. We talked about the income stability. As I mentioned in the beginning part, if you're in the sales like myself, in real estate sales, it's been really tough. Stability sucks really. But if you're like working in an engineering job, that you can get a job here in Oregon, or you can go to Texas, you can go anywhere, you can go to South Korea, then You can be a little bit less, a little bit more flexible in terms of the emergency fund amount and everything. People talk about the mortgage interest deduction. There is a savings, and you need to know your tax rate, tax bracket, and how much can you actually deduct that of the mortgage interest. And the inflation, yeah, inflation is really the big one. As I mentioned, the $1,000 monthly payment today will feel like $555 in 2040. So, let's see, what's a good example? The phone that I'm using right now is probably like $900. I bought this phone like 5 years ago, right? So 5 years ago, let's say $1,000. If I can use this phone for the next 10 more years at inflation 4%, 10 years later, this phone will cost me, or the $1,000 that I spend will be same as that $555 that I'll be spending in 2040. And if I flip that, because I spent $1,000 for this phone, in 10 more years, the $1,000 that I spend will become more like $2,400 that in 2040 value. That's the part that people don't think about, but it is reality. So yeah, the psychological factors, peace of mind, paying off a mortgage eliminates major debt, reducing financial stress, and providing security. So if you're like risk, is like making you lose your sleep. That's something that you have to think about. Their retirement goal, the age. If you're 25 years old, you just bought a home, and you have less than 2%, 3%, less than 3% interest rate, yeah, I may tell you to not pay off. But again, this is not financial advice. It's all about your age group, your retirement goal, and everything. Dropping high school and starting investing in stocks with a minimum wage job. I don't know. Or even under minimum. Dropping high school and starting investing in stock. Wow. Well, that's kudos to you. That's a tough one. You got a guy at what? You got a guy. I can't read it yet. Anyways, I'll come back. So the retirement goal, age, risk tolerance, peace of mind, and time left on mortgage too. If there are more time left, the bigger impact that's going to make of the decision you're going to make. No, that was my little blue though. I'm so sorry. That's okay. So anyways, yeah. Dropping high school and starting investing. Yeah, if you can have a steady job, do whatever you want. It's your life. But, I don't have any opinion on that or anything. So, yeah, I think again, this is not financial advice, guys. This is not real estate advice either. I'm just going through the thought exercise here. See. Some say that paying off your mortgage and you basically like lock in your wealth in a house when you pay it off, but that's not always the case because of the cash out refinancing option. And also you can sell nowadays, as long as you price it right, you can sell properties within a month and then get that money in your bank account. So yeah, it's not really locked in. But I did see a retiree who had everything in the house and he didn't have income and he didn't have savings. That's kind of tricky one. So it's always good to have, I think, extra savings and paid off house and then some investment and so maybe own a business or something. I mean, that's probably the best way to go. But if it's a stupid idea, just tell me, dude. Oh. If it's a stupid idea, yeah, don't quit high school. Isn't high school like free? Yeah, I don't know. I grew up in South Korea, so I have no idea, man. Dropping out of high school, if you have better things to do it. If you don't have better things to do, don't do it. Just stay in high school. You'll learn something. Hope that makes sense. MSA 7. And there's some purple logo. I don't know what that is. Sorry guys, I have a bad eyesight, so I can't even. It's like a birthday cake with number 1 or something. Yeah, I have no idea. But anyways, let's see. What else? Alternative uses of funds. Saving for retirement, funding education, starting a business, improving your home. If you have a fixer home, spending the extra money to fix it up, to get the home value really up, and then you may be able to refinance it. Some investors actually make money doing that. They buy really fixer home at a low price. The key is low price. And then spend like, I don't know, 1, 2, 3% of the purchase price into fixing things, and then rent it out, and then refinancing it, and then they sell or keep, whatever. There is the opportunity for sure. So yeah, let's sum this up. Is paying off your mortgage a good idea or a bad idea? Good idea if mortgage interest is high. Paying it off saves more than you could reliably earn elsewhere. You have no higher interest debt. Yeah, then it might be a good idea. Let's see. And you value the peace of mind, financial freedom. Again, paying off house doesn't mean you don't have house payment. You still have to pay tax, insurance, utility, and maintenance. Okay. As I mentioned, it's like $1,300 in Portland, Oregon, medium price home. Property tax is like $500 a month or more. So is there really a financial freedom? I hope that they get rid of property taxes. And the capital gain tax when you sell. That's a problem. You make equity, you pay mortgage every month, you work hard, you build that equity. Why do you have to pay taxes on that? It's a bad idea if the mortgage is low, like 3 to 4%. You could earn higher returns by investing extra funds. If you lack an emergency fund or high interest debt, like credit cards, that should be prioritized. That makes sense. You need liquidity for other goals, like business ventures, education, or emergencies. Yeah. You benefit significantly from mortgage interest tax deduction. Inflation is expected to remain moderate or high, reducing the real cost of your mortgage over time. Yeah, reducing the real estate, the real cost of mortgage over time. That's important. The inflation is a real issue here. When the money is losing value so rapidly, having real estate makes a lot of sense because it holds the value better than the cash. Not better than maybe some of the investment funds, but it's still something is better. Okay. Let's see what else. Yeah. So I hope that makes sense. I was just talking for like 24 minutes about this, and MSA 7 says, I've always wondered why do all businessmen and people of such always say this is not financial advice. That's because of there is a regulation that, thanks for the question by the way, regulation that if you're not licensed financial advisor, giving this kind of things can put you in jail. Yeah, because it can hurt people. Let's say if I have bad intention, if I'm a bad guy, and say, hey, I'm going to make you a lot of money, invest in my funds, let's go invest in apartments, that's how you can make American dream. And then I take your money and run. I'm not registered investor, I'm not anything that, those people will lose money. So it's a regulation in this country, which is a good thing. It's a safety feature to protect people. That's why I have to repeat that, so that people don't believe that I'm a financial advisor and investment guru and all of that, so I can, scam people, right? That's why I'm saying it. Kind of like the medical advice. If you give medical advice and you're not a doctor, you can go to jail. I don't want to go to jail. That's why I keep saying it. And many people say that. Like, meet Kevin. He always says that. There's, what's the other guy I follow? Graham Stefan is another example. He always says it. Anyways, jail, don't you think is kind of over-exaggerated? Yeah, you go to jail, dude. Well, I can't say trust me because I never went to jail for this, but yeah. You either go to jail or pay a bunch of fines, I suppose. I don't know. Do you have any other questions? So are you really gonna quit your high school and invest? That's pretty bold, man. Let's see. If there's no real other questions, I'm going to wrap this up. See, the thing is, the beauty of YouTube is that if I make live video good enough, I can actually post this as a video, and hopefully it's informative, but it can be a good content. The funny thing is, Instagram, I try to do it on Instagram. They didn't even let me do it because I don't have enough followers. I think Instagram sucks. YouTube really rules. So I have on Instagram like 460 followers, and you have to have 1,000 followers to do the live video. I'm not important enough, or I'm not worthy enough to do the live video on Instagram. Anyways, on YouTube, I have like 300 some followers, thanks to you guys, close to 400 actually. I have a Korean real estate channel that is going up to about 350 followers. So I probably could do it in Korean too on that channel. And then I do have a music channel that I have probably close to 300. So I could probably do it live there. And then I have a guitar teaching channel, which has been just accidental thing that I started like about a decade ago to a guitar students who couldn't come to lesson. I just basically posted what we learned that day, like weekly guitar lesson at Korean Community Center. That somehow is still there and is still gaining some followers, which is like weird. It's like 700 followers there. So yeah, I mean, I don't make any money from doing this, except for the actual home buyers and home sellers who found me on YouTube watching these silly videos I make. They actually do call me to buy and sell, which is, that's been helping me a lot. So real estate folks, do YouTube. So yeah, no more questions. Well, thanks for watching. Thanks for hitting the like button and subscribing. I hope that was useful information. If you have other questions, leave a comment. I try to answer. I mean, I don't get that many comments, so I will answer 100%. Any of your comment or questions. Thanks for being here. Thanks for your time. Yeah, man. Thanks for hanging around, and yeah. Do the best you can. I'll actually leave with one quote that So his name is Jack Cruz. He's a very controversial doctor online world. The thing that caught my eyes today, it's from this book. It's about health book. The one quote that I'm going to leave you with is this. Where did it go? Oh, here. So he's a brain surgeon, and he wrote in this book, I'll just read you the whole paragraph. It's pretty short. It's only 3 sentences. As a surgeon, seeing death daily made me realize the greatest mistake we can make is to live in constant fear of making an error. I can accept failure, but I can't accept not trying my best. Let me repeat that line. I can accept failure, but I cannot accept not trying my best. So I'll leave you guys with that. Thanks for being here. Have a great day. And failure is when you give up. Yeah, failure is when you give up. That's failure. If you don't give up, right? It's not failure. But what he's saying is, though, the point that I want to make is you failed enough. Can you imagine you're a surgeon, you're a brain surgeon, your patient died on your hand. He can accept that failure, but he cannot accept not trying his best. If he try his best on that surgery table, he can accept that. But so it's like, it's another way of saying, like, do your freaking best at what you do, you know. That's kind of stuck in my head today. And you know, messages like this pushes me to do my best. And it actually opens this live video, which is I still get a little bit of butterfly when I turn on live, you know. But am I doing my best in my time that I have right now? Or am I goofing off and doing doom scrolling? Or am I opening up a live video and share something that I think is important to certain people, right? Anyways, I'll say that one more time. I can accept failure, but I cannot accept not trying my best. So thanks for watching. Yeah, thanks, man. MSA7. Yeah, I don't know what it stands for, but have a great day and see you next time. Bye, guys.